That time of the week, talk to our buddy Zach Abraham, Chief Investment Officer, Bulwark Capital, friend of the show. What's interesting? I was talking to my buddy because the AI, I think everybody's waiting for the big AI bubble to burst or whatever. One of the things they were talking about is something you've brought up for a long time. You're going and you're like, oh, great, you're booking $13 billion this year is what you're bringing in, but you're out $1 trillion for the next 10 years. And how you are starting to make money. And I forgot what this is called. It's been forever, where you're essentially going to companies and you're making deals with them. They're selling you chips in the future. You're giving some of their stock, they're giving some of your stock, and you're thinking to yourself, how is it your prices are going up? No money's being exchanged, and you guys are all kind of just, playing around, hoping that it's going to work.
A lot of these, it's really hard to look at any of these deals that have been structured and come to any other conclusion than that. The only caveat I'll throw in there is I've heard some really smart people who I also think are very credible and knowledgeable in this space saying that there's a little more legitimacy to those types of deals than the public thinks. One of them, now I can't verify all this, so I'm just kind of presenting the other side of that story. The other one is a big part of a lot of these deals that people are talking about are with these companies that are they're buying the chips, but not to make anything themselves. They're buying the chips and then renting out the compute space, right? So they're renting out the compute power. Okay, so what one of the arguments has been, and I think it makes a lot of sense, is let's say our business is buying chips and then renting them out. Okay, what is that chip going to be worth 2 years from now? There's a big depreciation, right? Let alone if there's a chip breakthrough, right? Somebody else comes out with a better chip that's smart. There's just so many different things that you can that could slip that up and make, a deal that we structure today that looks like just free money could end up looking like, a boat anchor around somebody's neck. You know what I'm saying?
Yeah.
So then I saw a report that came out and said the cost to run the break-even cost on these things is like $4 an hour, and they're renting it out for like 14 to 16 an hour. So if those numbers are true, then some of these deals could make sense. Because basically it looks like a Ponzi scheme, but if they buy the chips and then they start realizing the rental revenue, that will give them the money to buy more chips, right? So it's kind of like, so it definitely has a Ponzi look to it, but if they can rent it out for that number, it may not be one. The problem is that that's the story, right? That's the story that they're telling. And, guys like you and I have the distinct privilege, if not disadvantage, of being around the block a few times. And whenever you see deals like this in a sector that's that hot, it's always meant everybody was just really pressing it. You know what I mean? It's just, these are things that you see very late cycle.
Yeah.
I could be wrong on that. And it is growing and evolving so fast. I think you have to entertain the possibility that you can be wrong on some of this stuff.
Oh, of course. I mean, like you said, it's growing so fast. It's something today that looks amazing. The same company you're getting those chips from, guess what happens? Those chips are going to be obsolete. They'll give them to you. They don't care at this point in time because those things don't even exist and nobody's going to rent for $14. They'll rent for $2.
Right. Well, and then here's the other thing. Look at what the chips cost. Look at how much you're spending. What is the depreciation of those things per year?
Yeah. It's like a car.
Well, and that's one of the tough things, more than a car, I would think.
Yeah, I would assume, but it's kind of like that car that you drive it straight off. It's
right.
Useless.
Right. But then think about it. So like, let's say you go buy a car this year and unbeknownst to you, the very next model year, the body changes, right? Yeah. And then you take a bigger hit than normal, right? And when you look at the AI space and the chip space in particular, and you look at how many amazing companies out there have good chips and are actively trying to make them better to compete with NVIDIA, to justify, if you're looking out over the next 5 years And the minute I say 5 years, a lot of people are going to be like, well, I'm looking out over 10 years. Yeah, that's what everybody says till they're down 50%,
Yeah.
right? It's amazing how when you start getting hit, how your time frame starts shrinking, right? When you're sitting on 50% gains over the course of the last 16 months, that affords you the ability to tell yourself you're a long-term investor. So, but it's the conclusion we keep coming to is that when you look at the premium that's been built into so many of these names, it's very, very, very hard to envision a scenario over the next 3 to 5 years where you're going to see revenues and remember, revenues are just one part of it, but then profits that justify this level of capex. If you go out 8 to 10 years, I think it looks more possible, right? To capitalize but I don't think people are realizing the amount. These companies are investing multiples of their annual revenue. And in a lot of cases, that's not enough. They're borrowing more.
Yeah.
Okay. So those investments for some of those guys are going to pay off big. But the thing that, in my opinion, everybody is forgetting is, guys, it's not just good. It's not just good enough if their revenue is going up. Remember, their revenue needs to be going up, and their profits, even more importantly, need to be going up in a manner that makes them statistically significant versus the capex spend, right? That's the only way to make. And when you realize how big the capex spend is, it's kind of mind numbing because you're sitting there going, boy, for this to work in the next 3 to 5 years, you'd have to see an explosion of economic activity. And that's the part. Well, they're going to have AI. They're going to have, who are they going to sell them to?
Yeah.
Right. So every company in the world is going to be able, I got to switch my camera there. But, every company in the world is not going to be able to switch out their entire manufacturing base in the next 5 years for robots, even if you have them available. Right. So this is going to take time. And like any type of investment, the world is littered with all kinds of investments or companies that worked eventually, but 2 or 3 people went broke trying to get them there.
Yep.
Right. And I just think a lot of these companies are, and I get why they're doing it. If they're not in this game, it's an existential risk to their company. So they kind of have a gun to their head to keep investing at this level, but investors don't. And I think that there are still reasonable and valuable ways to play the AI space and to benefit from it. It's not going to be front and center where you're going to own the stocks that are going up 40% in a day. But they're not things that you're going to wake up and realize are a zero one day, right?
Yeah.
You're not going to wake up and hear the SEC issued a notice to them. I'm forgetting the name of the notice that they put out. But anyway, that the SEC is actively investigating them. You know what I mean? So I don't want to discount it. I've made that mistake in the past. I've made that mistake of just writing things off. I did it with Amazon. Oh, they're so expensive. Are you kidding me? I'd never own Amazon. That was lazy. Didn't dig in, do the homework needed. So got to keep an open mind, but it's the level of spend versus the profit they got to get off it. It just looks impossible at this point.
Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. The market is wacky. The economy is bizarre. It's super damn expensive at certain things. Other things seem to be leveling out. It feels like, man, I got to be honest with you. It doesn't feel great. It feels very uneasy, I think is a good way for the consumers. And of course, you got the fourth quarter. Nobody knows what that's going to look like you got a government shutdown. How long is this thing going to last? You also look out there and think, how long are these tariffs going to last? What exactly is going to happen, with China? I mean, man, this feels, it feels weird.
It does. And the market is really confounding us too, because it literally flips back and forth like every 2 days where you go, okay, I feel like we're heading in this direction. And then, we are looking at it today. If you look at the indices, you're right at all-time highs. So it looks bullish. The problem is it just like we were talking, it just feels so heavy.
Yeah.
Nothing can get lift off. Every time you see something pulling off, it gets hit within the next couple days. And it kind of feels like they keep trying to rally different things. And the thing that worries me a little bit about that is you're really trading at the top of the valuation range that this market has seen at any point in the last 15 years. When you look at the underlying economic realities, it's really hard to justify the idea of multiple expansion here, meaning, yeah, maybe stocks aren't going up because they're making more money, but people are just paying more for them, right? It just feels heavy here. That being said, you look at the charts, it looks constructive. People are sitting there going, well, Zach, don't you have a better definitive view? No, not in a market like this, not in a market where you're running 7% deficits. There's so much liquidity coming in. I mean, I was talking to some guy the other day. He's like, well, you think this or you think that? And I go, but it's not about thinking, man. I'll throw 5 different companies at you right now. And why don't you try to make financial sense out of their valuation? And there's just so many you can't. You just can't, right? I mean, now, are the AI companies different? Yes, we're trying to handicap an unknown future. That's a different deal. I'll give it to you. But there's just so many different things where I could point to you and just say, look, the primary function of a market is to be a price discovery mechanism, meaning that's what a market is supposed to do, is to accurately price something. I can show you 100 different equities right now where it proves to you the market is not doing its job, right? I mean, all over the place. So now I'm not saying I know exactly what the right price of those securities should be, but when I'm looking at companies that have cleaner balance sheets, double the margins, company B's got a cleaner balance sheet, double the margin of company A, does more revenue, more profit than company A. It's growing at 15%. Company A is growing at 5%. And you've got double the valuation on company A and they're in the same sector. That doesn't make any sense.
No,
right? That just doesn't make any sense. So there's just so much of that going on. But to be fair, those conditions have persisted for a while. And so I was on the show with you last week saying, look, I really think you're going to see a 10 to 15% pullback within the next 2 weeks. That looks less likely right now on the charts. Then you look at the other stuff I'm talking about, and it's like I said, this lack of ability for us to really break out from this area. I don't think we're out of the woods yet. Now, this market appears to want to go up and not care about anything else. And if that's what it wants to do, that's what it'll do. I don't think you're out of the woods yet. And I think a lot of people think you are. And I definitely think you could see some fireworks. And to be fair to either side, when you get, I know it sounds like I'm saying nothing, but I want the listeners to understand when you've got these kind of economic underpinnings, you have these kind of separations and deltas in valuations. You've got the US trading at the highest market cap as a percentage of the rest of the world ever. You're at all of these historical extremes. It's calling the tops of things like this is a fool's errand. It's impossible. Nobody knows, and especially when things are priced so far away from reality, you just don't,
Yeah.
like someone go, oh, the market's trading too expensive. It can't go up. And I'm like, what's the difference between 33 times earnings and 39?
Yeah. You can't price delusion.
No. I mean, like I said, where is that crazy break even line? Is it at 32 times earnings? Is it at 36? Is it 38? Overvalued is overvalued. I don't know what.
When is that bridge too far?
Yeah. I mean, look, in Japan, that metric went to 100, right? So, I mean, did it make any sense there? No, it was absolutely insane. Right. But that's how far it went. So, I mean, you can't dismiss the idea that we keep rolling from here.
Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out to you because they'd be foolish not to, brother. What do they do?
Pretty easy to find. BulwarkCapitalManagement.com. You can find our daily podcast at knowyourriskpodcast.com. BulwarkCapitalManagement.com, knowyourriskpodcast.com. Just Google us. Not hard to find. And hopefully we'll hear from you soon.
Sounds good, brother. Good doing it. And we'll talk to you next week.
Hey, thanks a lot, man. Always fun.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.